Will interest rates continue to go down, and is the Canadian real estate market on the road to recovery? In this video today, I'm going to summarize everything that's been going on these days in the Canadian market and discuss whether or not we should have a restored faith in Canadian real estate. So wouldn't you know it, we've had a recent interest rate drop of 50 basis points. 0.5%, that's really amazing. And if you don't know what that means to your mortgage rate, let's quickly recap how this is going to affect the average Canadian. So as I've explained in previous videos, every 0.25% that you're going to see on the average mortgage in Canada, meaning if you're holding a mortgage in and around $700,000, every 0.25% is going to be worth about $100 in monthly mortgage payments to you. So if you're dropping 50 basis points, 0.5%, if you have any type of mortgage in and around $700,000, that's going to make approximately $200 difference to you. And if you have mortgages across multiple rental properties, this actually adds up to quite a bit. I've seen some real estate investors making an extra $1,000 a month across 4 or 5 rental properties just because of this one interest rate drop. But how is this affecting the real estate market, and are we going to still stagnate, or are we going to see things start to go up? Now, the first thing I want to talk about is why do we think interest rates are continuing to go down? I mean, we all saw that it was trending in this direction, but what are the main driving factors behind this, at least speculatively? Why experts are saying that the Bank of Canada dropped the interest rate has a lot to do with the rising unemployment rate. We are pushing 7%. This is high, and I always said that we need unemployment to go higher in order for interest rates to come down, and that is what's happening now. However, what do all these factors mean in terms of affordability? Are real estate prices going to now go up? Are rents going to continue to go up? Or as real estate prices maybe become a little bit more affordable, is that going to pause the rent increasing and maybe plateau it a little? Or is it going to go down? We started to see some prices in Toronto going down when it comes to rent, or at least it's starting to stagnate despite the increasing population. So what does this mean? One of the driving forces behind this is the declining private sector employment rate, where public sector has been dwarfing private sector for quite a long time now. Tons of government jobs. For those of you who are in Toronto, have you seen those traffic cops around King Street and a lot of the downtown area? We have perfectly good working lights, but we have these public servants right there directing traffic where there's already traffic lights. You know, things just don't make sense. And I feel like the government's just been creating jobs, and these aren't exactly the most productive, right? Instead of investing in fixing the infrastructure, they just put street cops. And then when you contrast on the private sector, you'll see a lot of companies are actually leaving because taxes aren't being alleviated. Things are getting so expensive, and we're not exactly producing anything, which is a downside for Canada right now, because as inflation happens, I mean, if you really put everything together, how does it look for Canada right now? Inflation is high. We're also approaching 7%, or we're in and around it right now. We have high unemployment. The dollar is losing value relative to the US dollar. And on top of that, for anybody working, think about it right now. People say that $100,000 income isn't a lot. For everything that you earn above that, you're pushing a 45% tax rate, which means that for every extra dollar you make, you're making almost 50 cents on that dollar. So if you're saying, hey, I need an extra $20,000 to live, you need to make $40,000 roughly in order to see that in your bank account. This is ludicrous, right? So what you're working for is seriously declining, and the Canadian dollar is just getting weaker and weaker. So I just sound hella negative about the Canadian economy, but I really want to loop back into what does it mean now that interest rates are dropping? Is it enough to really restore what we had in the Canadian real estate market, and is it going to actually help people? Well, the reason why Bank of Canada is doing this has a lot to do with the fact that they are cheerleaders of the economy. They want to make sure to maintain inflation rates at a certain level. However, they also want to make sure that they protect the economy and the growth of the economy. If the growth of the economy is lower than what they expect, which Bank of Canada had already stated that it was lower than what they expected, they now need to get involved a little bit to stimulate things. But is it too little, too late? If we pay attention to surveys and data that has to do with paying attention to the disposition of the public, how the people feel about the Canadian economy, or how people feel about housing, just because interest rates are coming down, do people feel like they can now afford things? And the answer is not really. It's because a lot of Canadians are feeling very disheartened, disenchanted with investing in Canada. They've already parked the idea of being able to ever buy and own real estate to own their home, so they're not even contemplating it anymore. Interest rates are going down, great, so what? Does that mean anybody can afford a home? The consumer finds it very unlikely. But with that being said, what is the Bank of Canada likely to do? Well, there's a couple things I want you to pay attention to. If you look at the trends when it comes to oil, interest rates and inflation have a tendency to follow this. So pay attention to what's happening with oil. You'll be able to see a lot of correlative data that shows this as an indicator. And then if we want to talk about population growth, the thing about population growth, there's a lot of talk about minimizing immigration. And the truth is that while this may help in some areas, it's actually not a sustainable solution for Canada. Because if we talk about what Canada has to offer, Canada actually really needs immigration. Like if you remove the immigration from the equation, you're going to cascade a lot of other problems into effect more quickly. Canada, although it's an inherently rich country, like we have resources, we have land, we have water, we have trees, we have minerals, we have everything. Like we are inherently rich. We could sell out the country for a long time before we really end up suffering. I mean, arguably we are suffering right now, but that's because we haven't tapped into that sellout infrastructure yet, right? So it's kind of ridiculous, but the country is inherently rich. So we have a long way to go, but that doesn't mean that that stuff should be abused. Where I really want to narrow in here is that with the general sentiment being not so optimistic when it comes to the future of Canadian real estate market or the economy, for anybody who does think that it is going to go back up, it's like a really long road. So Canadians are looking elsewhere to solve their immediate problems, their immediate income problems, their cash flow problems, and where it is that they can safely park their money if they don't feel like their dollar is holding up a lot of value. Which also means that if Canadians are not stimulating the Canadian economy by investing into it, that means that Bank of Canada is also going to be under more pressure to drop interest rates even lower. So personally, I think that interest rates are going to continue to go a little bit further down. Where I do think is honestly comfortable is probably around 3%, but I think that lack of stimulation is going to force Bank of Canada to do this bouncy ball thing, where they're going to kind of come down a little bit harder, and then they're going to have overdone it. People are going to get a little bit more excited. It's going to bounce back up. They're going to raise it again, and then they're going to kind of like do the slow bounce and plateau. So should you be continuing to invest in the Canadian real estate market? My honest opinion is that if you have anything that is already in place and that is good for a long-term game, like for example, if you have property that you can convert into multi-unit, definitely hang on to that, because right now Canada has a lot of initiatives that's pushing multi-unit development. They are making it easier, as much as possible anyway, to densify current product that is available, right? 3 units, 4 units, 5 units, you can start going into CMHC, MLI programs. And if you want to know about that, check out one of our other videos where we talk about that in more detail. But if you're like, I need to make some extra money now, you really should consider our very close neighbor to the south. And we have been talking a lot about investing into US cities that are not too far away. I've actually been talking a lot about places like Cleveland, Ohio, not because it is the most glamorous place, but because it cash flows. We just finished wrapping up a property over there that we picked up for $147,000. Is going to rent for $2,500. Now, I should say that we also spent $30,000 renovations on the property, but no matter how you slice it, this far exceeds the 1% rule. And this is off the shelf. This is on the MLS. We've also started doing wholesaling over there, finding off-market deals, and these yield better results. There's house flipping opportunities. What I talk about is how a lot of the strategies that we learned as Canadians to do in Canada back in the day, these are now brand new opportunities that exist in the US. Not brand new opportunities, they're just not as saturated opportunities as they are here in Canada. We used to look at some people who are coming in from Asia and they are employing various real estate investing strategies. It never really occurred to me before, but what they're actually doing is they're also doing the same thing that I'm talking about now for Canadians to do in the US. People from the East came over to Canada and they've already seen the market go through what we're going through now. You know how many people I met who said, yeah, they saw this coming because this happened in their country before. Now Canadians are also going to certain places in the US where they can see familiarity and they can see things that they've already seen in their local market. So if you feel like employing some of these strategies and you want a bit of a fresher playing field to get into, you should definitely consider some places in the US. You can go close if you want just south of the border, or you can go further, Texas, Florida, you name it. There's a lot of places that still have a lot of green grass to play in. So definitely we're big advocates on this. If you want to know more about this, we currently have training programs that talk about this, because we want to be teaching people how to do exactly what we're doing, how we're adjusting as Canadians in the real estate market in order to keep ourselves invested in strong cash flow positive properties. So I hope you guys enjoyed this video. Please remember to like, subscribe, and I will see you on the next one.